But over the past 4 months, property listings, the stock, have actually fallen by about 11%. Now, I personally find this very interesting because when sales go up, when a few more buyers come into the market, everybody's being a bit more realistic, listings tend to go down. Well, hi again, everybody, and welcome along to another edition of Tea with Tony with NZHL. There's a lot of interesting stuff happening in the housing market at the moment. From my point of view as an economist, sure, I'm trying to get a feel for when the housing market actually bottoms out in terms of sales, obviously of huge interest to the many real estate agents out there, some of who are leaving the sector, and of course in terms of prices, because there's literally got to be tens, if not hundreds of thousands of people out there waiting before they make a purchase until they think the housing market has bottomed out. A lot of people have sort of put those intentions on hold over the past 1.5 years, and that's really the sort of thing I'm interested in. The fact that when I look predominantly at the housing market from a medium sort of to long-term point of view, we've got a big queue of people sitting on the sidelines waiting for the bottom in house prices. So I'm going to be having a look at some of those factors which may contribute towards that turning in the housing market, but it's very much more from that medium term point of view rather than the exactly what's happening at the moment, the stuff that's discussed in newspapers, all that sort of thing. So let me start with what's happening with interest rates, because obviously a key driver of the housing market is the level where interest rates are at and where people think they are going to go. Now, the level where they're at the moment is basically the peak. In fact, a few months back is when we passed the peaks for the 3, 4 and 5 year fixed mortgage rates. I'd say we're at the peak for the 1 and 2 year bank. For some banks, this is their peak, but for others, not so much. The peaks for those rates at the moment. But we are not yet into the phase of the interest rate cycle where people are of the view, and now they're going to be falling away. Oh, I wonder in the next 18 months if it's half or 1 or 2%. We're not there yet, but at some stage we're going to get there, and when that happens, the still at the moment very high level of concern which people have about taking on board a new mortgage will disappear. The interest rates, when people are thinking like that, are probably still going to be relatively high, but the expectation of declines will become at some stage a driver of buyer behaviour. We are not there yet, but I think that's going to be coming along within the next 6 months in New Zealand. Now, of course, the most significant thing on the interest rate side recently was the April 5 tightening of monetary policy, the 0.5% increase in the official cash rate by the Reserve Bank. Just for your guide, they didn't actually intend that mortgage rates would rise after this. They were looking to prevent mortgage rates from falling in response to bank wholesale funding costs, which had fallen in response to the banking ructions problems in the United States, causing a decline in expectations for US growth, US inflation, and therefore US interest rates, compared with what had been the case before Silicon Valley Bank went under. So that was the aim of the Reserve Bank, but I think we had some banks there doing a bit of opportunistic increases in the 1 to 2 year fixed interest rates. Whatever. For now, we have monetary policy either at or very near its peak. The next review of the cash rate is May 24. I'm tending to think they won't increase the cash rate, but whatever. The Reserve Bank basically said from here on out they're going to be judging further monetary policy decisions, stable, up, down, on what happens with domestic demand, so consumer spending, etc., and the inflation indicators. Now, one of those big drivers of domestic demand and also the housing market, especially if you're up in Auckland there, is the net migration flows. Now, on average over the past quarter of a century, New Zealand has enjoyed a net migration gain of about 25,000 people each year. A year ago, it was a loss of 20,000. Now, in the year to February 2023, we've got a net gain of 52,000 people. That's a 1% boost to the population. And so look at this from the point of view of the Reserve Bank. Extra 1% people in the population, that's an extra 1% of spending that, frankly, they wouldn't have anticipated. Not a single person expected the migration numbers would be like that at the moment, but they've got to offset that extra inflationary pressure from a little bit of extra consumer spending, bit of extra upward pressure on rents, for instance, from the fact that there are now more people sloshing around in the labour market. Businesses, the difficulties in getting both skilled and unskilled people, the difficulties are high, but they have decreased over the past few months. And I think that net migration boom partly accounts for that. So you see, we've got some upward pressure on inflation for the migration boom and maybe some downward pressure on wages growth. We're going to get some update on the employment numbers from when I'm speaking at the moment in 2 days' time. You're probably going to have that information in hand already by the time you come to look at this. But just be aware that the labour market changes after the overall economy changes. Businesses don't hire and lay people off, just willy-nilly. They can take a long time to make their decisions. That's why the unemployment rate tends to peak well after an economy has bottomed out. So our economy shrank 3% in 2008-9, bottomed out in 2009. The unemployment rate didn't peak until 2012. So, just keep that in mind out there. But even as the unemployment rate does go up, it's probably not going to be getting back to the 6.7% we saw in 2012. Frankly, from an employer's point of view, we'll be lucky if we get to 5% because people are in short supply. And what's unique this time around is that it's not just in New Zealand that the labour market is tight. It's also the case overseas. And that just says to me, with other countries more actively competing, especially for skilled employees, what's going to happen in New Zealand, I think, is that we'll get a lot of low-skilled people, which will be hugely beneficial for the tourism, the hospitality sector, but we're not really going to be competitive so much on the skilled end of the spectrum. I could really hive off for 10 minutes about what it means for business implications, but I think we will get some suppression of wages growth, certainly at maybe the lower half of the wage spectrum, occupations, etc., out there as a result of the net migration boom. Now, one of the interesting things which is also happening out there, falling in the category of at some stage people will realise this, and this is one of those medium-term fundamentals that as an economist I look at, is the number of properties listed for sale. If we go back to 2021, when house prices surprisingly rose by 11% in the second half of the year, despite interest rates rising, migration outflows, LVRs back, etc., the only factor I've ever been able to identify to explain why prices rose another 11% was a big fall in the number of properties listed for sale, down to 13,500. Well, at the end of the last year, of course, with sales being relatively weak, the number of properties listed for sale, the stock was about 29,000. Nobody feels in any hurry. People can pick and choose. It's all relatively good. It's a buyer's market, basically. But over the past 4 months, property listings, the stock, have actually fallen by about 11%. Now, I personally find this very interesting because when sales go up, when a few more buyers come into the market, everybody's being a bit more realistic, listings tend to go down. We don't historically have, the market picks up and then a flood of new vendors come forward. I don't think that's what's going to happen. What we've got is 18 months of a queue building up of the buyers holding off, waiting for the bottom in the price cycle, thinking that they can pick and choose, and that has been the environment. At some stage, people are going to recognise that the listing stocks are falling away, and that also will become a motivator of buyer behaviour. So, what I've tried to do today is have a look at some of these longer term fundamentals which are not well recognised by potential buyers out there as starting to turn around. And I emphasise that it's that recognition by people which really matters. If these things change but nobody sort of sees it happening, you don't get what becomes ultimately a big driver of house purchase decisions: expectations for the future. Everybody is focused on the market of, I can't even make a purchase because the banks are using test interest rates of 8.5% to 9%. Maybe it's not even any point thinking about it. But at some stage, people are going to be thinking the outlook for interest rates is improving. They're going to fall by X% over the next 12, 18 months, 24 months or so. That will alter their behaviour. At some stage, they're going to realise these migration numbers are through the roof. We're not losing people to Australia. Where are all these people going to go? at some stage, and this might be one of the last ones, they will realise construction is falling away. But we need more construction to house all these extra people coming into the country. So that's going to become interesting. And at some stage, people are going to realise the number of listings to pick and choose from is falling away. And of course, if there's one thing we've been trained to do ever since the pandemic came along, it is that when we hear talk of a shortage, we will do panic buying of whatever that is, be it toilet paper, be it the hand sanitizer, be it frozen chickens, eggs, or whatever. So we're triggered now. We're primed, and at some stage, maybe not this year, early 2024, someone is going to write a column. I wonder if we're going to face a shortage of listings again. I don't know ultimately what the trigger is going to be, but we are near the bottom of the house price, the house turnover cycle. We're going to see an upturn. There is still some water to go under the bridge, but all I can do is make my final comment I've made many times before, especially to young buyers. This has been your best opportunity in a generation to make a purchase. It's hard to do with the deposit requirements, with the interest rates being high, but you haven't been facing competition from investors, and I don't really see a big flood of investors coming back in the market, maybe unless we get change in government and change in the rules out there. But the clock is basically ticking on this downward leg of the housing cycle, which has been running for about a year and a half now. How rapidly will house prices rise once we do see the cycle turning the other way? All I can say is there is absolutely zero way of knowing. Not a single person picked the soaring of house prices after the pandemic started. Not a single person picked the extent of falls in house prices from the peak in November of 2021. So don't look for sort of any great specificity here. All I can say is that the cycle is getting close to turning. So keep an eye on it out there. In terms of the timing for the bottom, I do think sometime in the next few months, but we'll have to see how that goes. In an election year, frankly, anything is possible. So let me just make one final comment that these are my personal views, not necessarily those of NZHL. None of what I've said has been intended as personal advice. You should go and see a financial advisor when you're looking for something more specific to your circumstances. All the best, everybody, as we head towards the end of autumn and through into winter. And definitely a thought to those people who are still grappling with the after effects of the bad weather, the flooding earlier this year, and of course now themselves unfortunately being triggered when we do get extra rain events, as is happening right at the time when I'm recording this up in Auckland. All the best out there.